Today we're going to take a tour of the Binance Exchange screen. So you get here by going to Exchange Basic, and this is where you'll do all of your crypto trading. Let's start over here with the idea of a trading pair. Let's start with how this is different than the stock market. When you buy shares of Apple, it's always implied, being in the US, that you're trading dollars to get shares of stock. So we just talk about buying stock and selling stock, but really what we're doing is trading US dollars for stock, or if we're selling, we're trading stock for US dollars. In the crypto sphere, this is not implied. There is no reliable base currency. Bitcoin is the most common one, but as you can see here, we've got 4 different kinds across here. We have Bitcoin, Ethereum, BNB is the Binance native coin, and it intermediates a couple currencies, and USDT, which is a US dollar equivalent. It's a pegged cryptocurrency. So each of these represents a pair. If I click on USDT, I get, here are all the things I can buy and sell relative to USDT. I can trade USDT to get BCC and vice versa, or ADA and vice versa. But if we pick something like, let's go to one of the big ones. So many things are pegged to Bitcoin. So Bitcoin has all kinds of stuff. You can see BAT. So if I want to buy or sell BAT and I have Bitcoin, well, it's easy to buy BAT because I can trade Bitcoin for BAT. But if I have USDT and I want BAT, well, it's not available. So if I have USDT and I want BAT, I might have to go USDT, trade that for Bitcoin first, and then take my Bitcoin and trade that for BAT. So sometimes you got to do multiple trades, and you want to keep that in mind when you park money, like if you use USDT to park money after you sell, or simply if you want X and you've got Y, you've got to make sure, is there a way, what's the shortest way to get there? And it's not uncommon that you have to do 2 trades to get there. So this is how you filter per what we call base trading pair. And then you can filter. So let's say I wanted to buy a PIVX. USDT does not have it, BNB does, Ethereum does, Bitcoin does. So if I had USDT and I wanted PIVX, I'd have to trade USDT for one of these 3 other things, and then trade that for PIVX. So those are trading pairs. That's what's so different than the stock market. Okay, so if I select Ethereum versus USDT, that updates the rest of the screen to interact with that trading pair. Notice it up here, Ethereum versus USDT. So Ethereum, given that I've chosen USDT, this is in dollars, or something very, very close to dollars. So this is more what we're used to in the stock market. But if let's say my favorite trading pair, EOS, let's say I have Ethereum and I want to buy EOS. Well, now we're in EOS ETH trading pair. Well, this is still price, but the base is not dollars or something equivalent to dollars. It's Ethereum. So this is the price of EOS, but it's the price of EOS in terms of Ethereum. This is the high of EOS on this chart relative to Ethereum. Now let's look at the order book. I'll actually switch back to keep this a little more familiar in dollars. On the left side of the screen, you have what's called an order book. These are all of the people who have requested to buy or requested to sell at a particular price. So the red is sell, the green is buy, and these are literally individuals, or maybe a few people if they choose the same price. This person says, I want to buy 10.4 Ethereum if it's at 604.01. And I don't want to buy it unless it's less than that price. And then if you go down a little further, this person says, oh, I want to buy 16.6 Ethereum, but I only want to buy it if it's 603.61, right? So they're not interested in buying unless the price is lower. So as you go down this list, the prices are getting lower, and you can see how much Ethereum, in this case, people want to buy at each price. And they're just waiting to have their price met and somebody to sell. these are all the people selling. These are all the people saying, I'll sell 11 Ethereum at 604.56, but I don't want to sell unless the price is at least that high. And up here we've got 60, almost 60 Ethereum at 605, and I don't want to sell unless the price is at least 605. And so what happens is you stack orders on the order book, and then in the middle you have people who, somebody here sells to somebody here. This is a little simplified. I'll mention this later, but basically you've got somebody selling and somebody buying, and see how there's a gap in price here? At some point, somebody says, I'm willing to sell at 604.01, and sells to this person. And this person, sells to this person. This is sell, this is buy. So these are meeting in the middle. And meeting in the middle leads to what we know as the price of a stock. The difference is this price of a stock is much more volatile than you're used to in the stock market. When you're dealing with the stock market, the number of people and the size of the orders are so big that this current price is much more stable. You could buy 10,000 shares of Apple if you wanted to, and it isn't like you would move the price. You've got an entire world of people buying and selling Apple. So there's so much Apple stock available to buy, or buyers available to purchase stock you're trying to sell, that the price is relatively stable and you can sell a lot of volume. But notice, if you want to buy, let's say 50 Ethereum, or even 20, well, that just came on. If you wanted to buy, let's account for this, 100 Ethereum. Well, there's only 42 Ethereum that somebody's willing to sell at around the current market price. So if you went to market and you said buy 100 Ethereum and said execute, it would take, the 41's gone, but it would take the 41 and it would start paying each of these people for what they're willing to sell until it found enough people to sell 100 Ethereum. Now, each of these is at a particular price, remember, so you're actually pushing the price up. You're saying, well, I'm willing to buy 100 at market, at whatever price people are willing to sell. Well, 14, 24, 75, on this entire order book, we've got less than 100 Ethereum on the entire visible order book. So you would buy all of these at those prices that the sellers are willing to sell. And so you push the price up significantly on an order of just 100 Ethereum. This is called market depth. Market depth refers to how total volume that's available on an exchange. And so it's a measure of how much can I buy and sell without moving the price much. So just know that if you execute a market order, you don't get your entire order at this price. You're literally going to be matched up with individuals willing to sell at different prices, and it'll just keep executing into the order book until it fulfills your order. Same on the reverse. If you're selling, it'll sell for this price, but then it'll sell for a little less, and it'll sell for a little less, and it'll sell for a little less, until the exchange can find enough buyers to buy all of the Ethereum you're trying to sell. So that's how the order book works very differently in crypto. It works the same in the stock market. It's just that there's so much more volume. You don't run into a situation where you're trying to sell too much and you buy through a whole bunch of different prices. So let's talk about how to buy. If you go to market and enter a number you want to sell, you actually have a balance here, and you can sell any portion of that. So Binance provides these little clickable buttons where you can say, I want to sell 50% of all of the USDT I have to buy Ethereum, and it'll fill this in. Or you can just click here and type a price. Same on the sell side. Now, when you click buy, let's buy 0.5 Ethereum. When you buy at market, you have this idea of open orders, which we'll get into in a minute. Market orders execute immediately. The exchange is going to go to the order book and just say, all right, 0.5, so I got to buy all of these, and then I got to buy some of these to get this person who wants 0.5 right now, 0.5 Ethereum. So it's going to happen immediately. Open orders are when we get to limit in a minute. You're going to be one of the people on the order book who say, well, I want to buy, but I only want to buy at a certain price. And you'll sit on the order book. So that'll be an open order, an unexecuted, unfilled order. Market orders are going to fill immediately. So let's buy half an Ethereum. And on Binance, you have to put a leading 0, which is really lame. Order submitted. And then it never shows up in open order because it happens immediately. But if you look at the 24-hour order volume, here's my half an Ethereum. It was a buy order at market of Ethereum versus USDT. And this is the average price, which for that, this is the average of all of the people that had to be bought from to get my 0.5 Ethereum. And the turn to choose is filled. So this is now a filled order, and it happened immediately. Now, last thing to know about this is the fee. On many exchanges, it's actually very valuable for them to build an order book with market depth. So many exchanges offer an incentive for you to set limit orders and contribute your buy and sell orders to the order book. So normally the fee is higher for market. This is the case on GDAX. If you buy at market, you pay one fee, and if you set limit orders on GDAX, you pay nothing. So here you can see the fee. Now there's this cross out. I think that's the historical amount, or I don't know, the normal amount. I don't quite remember how this works. So 0.05% is what you'll be charged every time you make a market order. Now if we switch over to limit, notice it's the same. So Binance does not incent people to make limit orders. So in this case, if you want to execute at whatever price right now, and you don't want to wait for limit orders, you'll see how it's a little messy in a moment. You can use market on Binance, and there's no disincentive for doing that. Now, limit order, as I said before, is I want to sell at a particular price or higher. I don't want to let my Ethereum go for less than a particular price. Buying is the opposite. Buying is saying I only want to buy if it's less than a certain amount. So let's buy another 0.5 Ethereum. And then I get to set my price. Now I can click here and type my price, of course, as usual. But Binance allows you to look at the order book and consider, well, I want to buy at this price. You just click it and it fills it in. And it recalculates the price of what you're buying in the base pair. Now, if I want to execute now, I'd probably just click here and become part of this order at the next available price. And depending on which direction the market's going, see how it just bumped that down? I would have been bumped down by these people who said, you know, I want to sell, but I want to sell slightly more at a slightly higher price. Well, all of a sudden I'm bumped down one because somebody's willing to sell, or somebody's willing to buy at a slightly higher price than me. So it pushes me down the order book. So if the price is rising and people really want to buy, and you put an order down here hoping for a deal, you might get pushed deep into the order book because the price just starts going up. So let's say, and you know, right now there's somebody willing to buy 45 Ethereum. So let's do a purchase, let's do an order here. I want to sell above what that person's selling so that it actually executes. So I'm going to pick that price and I'm going to offer just a tiny bit more so that I'm going to push that person down and be the top person on the order book so I can try to sell my Ethereum right now, just as this person just did. Oh, and everything moved again. So I got to click. See how it keeps moving? I clicked this, and this one immediately came on the order book. So this is the deal with limit orders. If you want to execute now, the orders are going to change and push you around. So let's see if we can get this done quick enough. Current buy price is 604.30. Well, 31. That's a tiny order. I'm going to go in at 31. Push this person down one. You can see a little orange arrow. That's my order. And it's a tiny order. See how it's crunching down, and it's sold. Now, it was also here for a moment. It was in the open orders while it was executing. Once it's executed fully, I have my 0.5 Ethereum. That's now in the history. So I have 0.5 Ethereum filled. It was a limit order versus a market order. It was a buy. It was in this base pair, this trading pair. and this is the average price. Again, if I had to buy from two different sellers at two different prices, this would give the average price. This is the price I requested it at. And you'll note the status is filled. So that's how market and limit orders work. Let's do one other example. Let's go further down the order book. There's 10 people here, 5. So there's not actually many big orders, but let's just go here and say another 0.5. Give you time to see some of this. So there's my little arrow. That means this is my order. I only asked for 0.5 Ethereum, so that means that someone else is also looking to buy Ethereum at this price. Now, since it's not executed yet, you see it here. Here's my 0.5 Ethereum order. It's a limit order to buy, 0% filled. Now, if you want to buy a lot of Ethereum, you make a request for 100 Ethereum at a certain price. You can actually see this this percentage will increase as you buy from different sellers. It'll fill partially, and you may have an order that fills 60-something% and then sits there because all of a sudden people are willing to buy higher than you were, and you start being pushed down the order book. In that case, if you say, or in this case where I don't actually want to buy, I was just demonstrating this, you can cancel an order. It's an open order, nothing's filled. Even if something has filled, whatever state the order is in, you can say, I no longer want to make this trade, and click cancel. You get a little success that it canceled, and now you have nothing on the order book. And that's it for the tutorial on the Binance Exchange page. If you have any questions or feedback, please leave them in the comments, and thank you so much for watching.